Today, we're unpacking an absolute clash of financial titans over corporate Bitcoin strategy. We're talking hundreds of millions of dollars, totally contrasting philosophies, and a high-profile war of words between billionaires over exactly how a major corporation should handle the world's most famous cryptocurrency.
To set the high-stakes stage for our explainer today, doing more harm than good for the world's largest cryptocurrency. Wow, those are the exact words of Canadian billionaire investor Frank Giustra, taking a direct and honestly pretty harsh shot at Michael Saylor and MicroStrategy's latest corporate moves. It's a heavy accusation, right? And it perfectly highlights the intense scrutiny surrounding corporate crypto holdings right now.
So, what exactly sparked this massive critique? Let's get into Section 1, the $100 million sale. The catalyst for all of this recent drama comes down to a very specific number: $102.3 million. That represents roughly 1,637 Bitcoin that MicroStrategy recently decided to sell off. Now, in the financial world, when a company literally famous for hoarding Bitcoin suddenly executes a sale of this magnitude, you better believe absolutely everyone pays attention.
But why did they actually do it? Well, MicroStrategy and its leadership presented this transaction as just a routine treasury management strategy. The stated goal from the company's perspective was simply to strengthen their balance sheet. So they're positioning this as a smart, strategic corporate maneuver rather than any sort of panic sell.
And this brilliantly illustrates a vital piece of context. Despite that $102 million sale we just talked about, MicroStrategy still holds a staggering 842,138 Bitcoin. That's valued at approximately $52.65 billion. So the crucial point here is that even after taking some profit off the table, they remain, by a massive margin, the largest corporate Bitcoin holder on the planet. Honestly, this recent sale was practically a drop in their very large crypto bucket.
But as you might guess, not everyone bought the routine strategy explanation. That brings us to Section 2, the death spiral theory.
Longtime Bitcoin critic Peter Schiff definitely did not hold back. He used a really vivid metaphor, calling MicroStrategy's STRC preferred stock an albatross around the company's neck. Basically, a psychological and financial burden that's just severely weighing down their entire structure. Schiff argues that MicroStrategy's past financial setups have created this massive hurdle that they're now desperately trying to manage.
Let's break down the exact financial mechanics from the past week that Schiff is criticizing. He points out that MicroStrategy didn't just sell roughly 1638 Bitcoin. They also sold over 3 million MSTSTR shares, and the goal for both of those actions? To raise cash. But why do they actually need that cash? Specifically to repurchase that STRC preferred stock, the very thing Schiff labeled an albatross.
Now, what's really interesting about this slide is the massive impact these capital management decisions have had on the company's actual returns. Schiff points out that these moves have severely reduced their year-to-date Bitcoin yield down to just 3.5%. That is a massive 74% drop from its peak back in May. And that steep decline, that is the absolute core of his argument against their overall financial strategy.
This all builds to Schiff's ultimate, pretty grim conclusion. He completely rejects any claims that these transactions are beneficial or accreted for common stock investors. Instead, he insists they are highly dilutive. He predicts this financing structure is going to require even more Bitcoin sales in the future, leading to continued dilution of common shareholders. Ultimately, Schiff describes MicroStrategy's situation as a death spiral. It's a stark warning that this setup, in his view, is fundamentally toxic for the everyday investor. Which brings us to another fascinating layer of this conflict. Let's move to Section 3, gold versus crypto. To really understand the heat behind these arguments, we've got to rewind the clock a bit. This tension between these camps isn't new at all. Back on April 16, 2021, Frank Giustra and Michael Saylor actually had a highly publicized debate on the merits of their preferred assets. Fast forward to August 2026, the $102 million sale drops, and boom, the feud is instantly renewed on social media. During this latest clash, one online user even accused Giustra of just being bitter over an unsuccessful debate performance back in 2021. But Giustra aggressively pushed back against that narrative, and he brought receipts. He pointed out that during their debate in April 2021, Bitcoin was sitting at around $65,000, while gold was at $1,700. Pointing to the subsequent performance of gold since that specific date, Giustra simply replied online, "I rest my case." He's basically using the historical price data to claim a long-term victory in their ongoing philosophical war.
So, what does all of this actually mean for us? Section 4. The big takeaway.
You might be wondering, why do these complex corporate maneuvers and billionaire Twitter spats actually matter to you? Well, it matters because this whole situation perfectly frames two completely opposing paradigms in modern finance. On one hand, you have Michael Saylor's vision of an institutional fortress. He views leveraging these assets as a necessary strategic treasury management move that fundamentally strengthens a corporate balance sheet. But on the exact opposite side, critics like Schiff and Giustra view this as a fragile house of cards. They are warning of a debt-laden, burdensome structure that inevitably leads to shareholder dilution and a catastrophic death spiral.
Which brings us to the ultimate question you have to ask yourself as we wrap up this explainer. Are corporate Bitcoin treasuries an innovative financial fortress or an inevitable death spiral of dilution? As more and more corporations begin intertwining their financial health with volatile digital assets, the answer to this question is likely going to define the entire next era of finance. Really think about it.